So tomorrow morning, you're going to wake up to one of three inflation headlines. Almost everyone is going to react to the wrong number, as always. The headline they'll all post is not the number that moves your mortgage rate. The one that matters for us is core. So here's the difference and why it matters this week specifically. Headline inflation right now, it's getting pushed up by oil. Energy spiked on the war with Iran, and that bleeds into the top line. But energy is volatile, and it's not what the Fed actually steers by. Core strips out food and energy, and that's the real read on whether inflation is sticky. So when you see a scary headline tomorrow, your first question is, what did core do? And there's three ways it can land. The first, core comes in hot. The bond market reads inflation as sticky, leans towards higher for longer, and rates feel upward pressure. Two, it comes in about as expected, mostly already priced in, and bonds shrug, and the focus rolls to PPI on Thursday. Three, core comes in soft. Even with gas pushing the headline up, the bond market gets room, and that's where rates get some relief. Now, here's a backdrop going into this. Bonds have been catching a bid. The 10 years actually been easing today, and rate volatility has calmed down a bit. Freddie's latest weekly average was 6.48% for a 30-year fix nationally. Oil's been pulling back, which takes some pressure off the long end. There's a risk off under its own in stocks, and historically, when equity volatility rises and money moves into bonds, rates can drift lower. But step back because the bigger force this week isn't the inflation print at all, it's supply. We're about to see the largest wave of new stock in market history. Goldman Sachs just recently estimates a record IPO year of north of $160 billion. SpaceX debuts Friday at around a $1.75 trillion valuation, and by one estimate, that single deal nearly doubles everything raised in the IPO market the past year. Anthropic and OpenAI are right behind it. This is the concentrated market. Again, mega caps are sitting near record weight. When that much new supply is about to land, money rotates out of the most crowded names to fund it. The exact tech and semi names that have been pulling back. So tomorrow, don't get faked out. Watch core for your rate, watch supply for the market. The headline is the noise, two are the signal. If you're in the middle of a loan, whether you lock or float, comes down to your file and your timeline, and that's a conversation, not a blanket call. I'm tracking the whole thing this week. Gonna see if the supply of IPOs coming